Nvidia's AI Developers Conference is underway. CEO Jensen Huang unveiling the next generation of AI chips to a packed house at the SAP Center in San Jose yesterday.
Hopper is fantastic, but we need bigger GPUs. And so, ladies and gentlemen, I would like to introduce you to a very, very big GPU. This is Hopper. Hopper changed the world. This is Blackwell.
Told you. Actually, the guy's name is David Harold Blackwell, a mathematician. It wasn't Richard Blackwell, the fashionista, but you can see it's a GPU that has all kinds of advantages in terms of performance and energy usage, and already anybody who's anybody is going to get this new line upgrade from Hopper. Cisco, Dell, Hewlett-Packard Enterprise, Lenovo, Supermicro, all plan to deliver servers based on the Blackwell lineup NVIDIA added. Our next guest is a tech investor who might actually understand this. He owns NVIDIA and joins us now. Paul Meeks is co-chief investment officer at Harvest Portfolio Management and finance professor at the Citadel for laymen. And I don't know what you are, Paul. You got an engineering degree or a mathematics degree? What can you make this easy for our viewers to understand? I mean, obviously, Becky and I are totally up to speed on this, but can you just make it easier for people that may not be as in the loop as us? What's going on?
Though I'll tell you, Joe, before the commercial break, you went through the specs and you were sounding pretty nerdy. So I like what you got. And I'll tell you this. So it's a larger physical GPU. It actually uses 2 die, which is a very sophisticated manufacturing technique from Taiwan Semiconductor. And you think about it, it's going to provide about 5x the performance of the latest H100 Hopper chip. And so essentially more and more horsepower. They're making a bet that there's going to be a never-ending desire for these chips as we continue to build out these large language models. And so we'll see what happens. You know, in about 3 hours today, they're going to have a meeting for Wall Street analysts like me, and we'll be able to hopefully get some guidance as to the financial impact. Because even though the specs here are pretty impressive, you know, they already have about 90% market share in the chips, the GPUs for building large language models. And so maybe this brings greater profitability, but they essentially already own the pie. And so what they announced yesterday, I thought was pretty snappy. And then next we can get into the NIM software that they also announced. But what we need to hear is for them to keep their technology lead specifically over advanced micro devices. And at least last night or yesterday afternoon, I think they checked those boxes, which they needed to check because, of course, the stock is up 5-fold since the introduction of ChatGPT a couple of years ago.
Well, better margins or better profits on a stock that a lot of people say is not that expensive relative to other technology stocks. That's not bad. The stock was off a little bit, but that could just be you know, the run up was so significant.
Right.
You said software. They're also talking about
so the next stage,
enterprise, digital. There was more than just the Blackwell, that new technology that was introduced, wasn't there? What else?
That's right. So in tandem, they offered software for inference. Now, in the AI supply chain, you start with your large language model building. And that's what's going to continue to probably happen for another year or so. And then you take all of that great data that you've crunched and you try to create some patterns that actually can be used by folks. And so what they want to do is make sure, since they already own the pie for large language model building, that they keep their lead in the next stage inference. So they announced NIM software, NIM. And what this will do is they are going to charge about $4,500 per GPU per year as a license fee to better be able to use their chips in this inference stage, which is the next stage of AI. Now, the price point is not going to drive revenue like the chips did. But the nice thing about the software licensing model is there are no manufacturing costs. It's 100% gross margin. So pound for pound, it'll be much more profitable.
I mean, that's a big deal, I thought, Paul.
A 1-2 punch that was necessary.
Yeah, I mean, just the idea that they're going to be so much more than just a chip maker, the idea that you could, I guess, become more like a Microsoft or somebody with the software aspects to that changes the equation, I guess, to some extent, in the profitability of this company.
Yeah, Becky, that's a great point. So what they're trying to do is become the AI ecosystem, kind of like Apple so successfully did with the walled garden, right? You had to have the phone and the watch and the earbuds. So this is what NVIDIA is trying to do here. Build a walled garden ecosystem in AI that'll be durable for many years, that doesn't just include several iterations of the fastest GPUs, but also software and probably other products over time in that bundle. So they're trying to copy that Apple walled garden playbook.
Nvidia also pulling back just a bit as investors digest that news out of the company's developer conference. Shares sitting around $868. And of course, they've got that new AI chip. I mean, I guess let's just kick this off with maybe even just your initial reaction to everything we've heard so far. Jim, I'll start with you. Are you surprised that we're seeing a little bit of pullback on this news? Was it not as, I don't know, as bang up as the market had hoped to hear?
I don't think that's what it is at all. Okay. I think it's just, it's had a hell of a rally, up 75-odd% year to date, and, something like 3x over the last 12 months. So a little bit of profit taking is warranted. Going into this sort of event, you think to yourself, well, what sort of rabbit can they pull out of a hat? And I'm not expecting them to come up with a cure for cancer on that sort of conference that they do. They did what they are supposed to do. They came up with the next chip that they're going to design, the B200, the Blackwell, updates to the operating system that will keep them on the leading edge of AI technology as far as semiconductors go. They did everything they're supposed to do. As far as it pulling back today, that's kind of noise to me. Stock trades somewhere around 35 times forward earnings. I'm looking at FactSet right now, which thinks that long-term earnings growth is 30%, gives you a PEG ratio of about 1.2. That's absolutely fine. So to summarize, I mean, there's nothing fatal that came out of yesterday. Some people may think that at 35 times it's too expensive. And you know what, Courtney, at some point it will be too expensive. At some point that 30% growth rate will fall off. There will be the double and triple ordering that catches up on client inventories, and then they miss demand or something like that. But that's several quarters away. That's not something to worry about today. This is just a healthy profit-taking pullback.
Okay. Shannon, what do you make? What was your reaction from what we heard and what we heard from Jensen Huang this morning?
I wouldn't necessarily disagree with Jim on this. I think, if you look at Nvidia, it remains sort of the easy button in terms of gaining access to the AI trade. And although there will clearly be competition, and if we think about the perspective that inference will become increasingly more important, and there's obviously going to be, in our view at least, more competition there than what NVIDIA has in terms of the learning chips. I think one of the things you want to really think about is, are there opportunities to garner this exposure outside of NVIDIA and the semis in particular, or even, sort of the Microsoft and Alphabet? Obviously, we had some good news on Gemini earlier this week as well. So I think one of the things is really looking at, to Jim's point, the valuation right now appears justified given the head start, if you will, in terms of what NVIDIA has. But this next leg of the AI trade, it won't be quite as easy to determine who the bigger winners and potentially some of the losers will be. And so I think that you're not probably going to get that dispersion or differentiation, though, till later in the year. So for right now, I think this is just a little bit of near-term profit taking. But looking ahead, I think is going to be necessary to capture this next wave of the trade.
Josh, it seems like a lot of the analysts obviously pretty bullish here. Goldman Sachs raising its target to 1,000 from 875. We're sitting right about, I think, 868 right now. Susquehanna going to 1,050 from 850. Does that feel appropriate for you today, even though we're having a little bit of a pullback on the news?
Hey, Courtney, I kind of feel bad for people who have just learned this story in the last year, as so many investors have. It's interesting. You hear people walking around talking about Blackwell chips and stuff who, like, a year ago, you couldn't understand the difference between linear computing versus nonlinear, or why GPUs, which historically were developed for video games, had anything to do with AI, et cetera. So now everyone's an expert. And that's where we have an issue. I'm long Nvidia. I've been long for a very long time. I'm still bullish on the future. But I think the issue that we now have is there's this mass acceptance that they are the platform, 80% market share, et cetera, et cetera, et cetera. Everybody gets that. Who are the new buyers? Or is there enough firepower coming in to add another $1 trillion to the market cap here? Because if there isn't, you're talking about price targets of 1,000, 1,050. I want everyone to do this mental exercise with me. On a $950 stock, if it goes to 1050, is anybody throwing a parade? What I like to do with these triple-digit and quadruple-digit stocks is I like to reduce it by 1 point and say this is like a $90 stock going to 100, like big deal. So I think it's going to be really tough for the pace of gains to continue here. I do feel really bad for people who got really excited about it in the last few months, because I don't know how much is left. This is a company that is pulling forward probably 3 to 5 years worth of demand into a single 12 to 18 month time period. They are actively telling governments and Fortune 500 companies, say yes today or get to the back of the line. And guess what CTOs are telling their CEOs? We got to say yes. If we end up on the back of the line, our shareholders are going to think we're schmucks. In that environment, it's not that Nvidia doesn't have opportunity going forward. It's that they are swallowing so many gulps of that opportunity that it's tough to say this is a stock going from $900 to $1,800. And the last thing I want to say on this topic, it really does remind me of Qualcomm in 1999. I think the stock split twice in 1 calendar year, which is really weird and really insane. And it's not that the bulls were wrong about Qualcomm's opportunity in wireless. It's that they priced it all in, a decade's worth, inside of a year. So you have to separate. Is the technology amazing? Of course it is. Is the stock price discounting a lot of how amazing it is? Yes, of course it is.
Very interesting take. Let's actually get some sound from Jensen Huang. He, of course, is the CEO of Nvidia and spoke with our Jim Cramer earlier today. And he says, look, we are more than just a chip company. Take a listen.
If you look at the things that we do, we build the chips, the systems, the networking, and so on and so forth, the entire data center practically, all the software that goes into it. And then we sell it in parts. The reason why we sell, and that is what confuses people. They think that NVIDIA is a chip company because we sell everything in parts. Right. The reason we do that is so that our customers could integrate NVIDIA's technology into their data centers however they like.
Jim, I'm going to get your reaction to that. Do you feel like that is part of why NVIDIA has this edge?
Well, yes, but I think actually some of the things that Josh said are spot on. Okay. Which is to say that this is not a train that will run forever. The Qualcomm analogy, just up 20-fold in a year and a half at the end of the last millennium. At some point, NVIDIA will face the same issues that Qualcomm faced, that any company that catches lightning in a bottle faces, which is to say it has the edge right now. Josh's comments about, CTOs saying we got to buy this now, that's not only what they're doing. They're saying we've got to put in 3 times as many orders as we think we need because we're going to get 1/4 of what we put in. And eventually that will back up and that will bite, in terms of inventories. That's what's more relevant to me. I don't think, by the way, that that's anytime soon. So when we talk about anything that's leading edge for NVIDIA right now, this train can run for a little bit further. I don't think it's going to double over the next 12 months, but I think the thing is you have to be prepared, folks, for that quarter that will come, probably 3 quarters from now, maybe 4 quarters from now, where NVIDIA says, hey, you know what, demand came in softer than we expected, and it's because inventories have piled up at customers. That will happen. So let me just summarize this again. As much as we want to talk about how cutting edge NVIDIA is, it will be found to be a cyclical semiconductor at some point in time. Not today.
That is really interesting.
Hey, one more thing on this.
Yeah.
Well, I'm sorry. It should be pointed out, this is a $40,000 chip. How many buyers are there? So we know Microsoft's really excited to buy as many as they can, and they could afford it. We know Alphabet's pretty excited. Probably a pretty good bet. Meta is really excited. And then Amazon. And, you know, look around. Like, it's not as though there are millions of potential customers here. There are end customers of those platforms that will benefit from how many GPUs are installed. But this is not quite the same as estimating, okay, in the handset market, 2 billion people are going to need a handset phone. So, look, nobody would say Nvidia is not in the best possible position of any tech company for the next 5 years. Like, no one would argue, okay, great, then what?
Get to Jim Cramer. He joins us with a very special guest. Jim.
Thank you so much, David and Sarah. Yes, I am with Jensen Huang, and we are at what some people are calling, Jensen, the Woodstock of AI. But isn't it much more than that? Isn't it about a change in everything we do when it comes to digital, when it comes to creating, when it comes to thinking? You're changing that. Isn't that what we're doing out here?
Yeah, this is an incredible conference. This is NVIDIA's developer conference. Everything that we do starts with software. Everything we do starts with software. And everything we do is in service of all the software developers who are solving these really difficult algorithms. We are represented by $100 trillion of industry here. Healthcare is here, financial services are here, manufacturing, industrial, automotive, climate tech, you know, holy cow, communications is here, consumers are here.
But people always think of you as hardware. You're talking about a different platform, a system that frankly may be unassailable from competitors, because once all these companies get involved with you, they're going to stick with NVIDIA.
It's a very specialized way of doing computing called accelerated computing. And what we do is this, Jim, this is the observation a long time ago. 30 years ago, we observed that the CPU is really good at many things, but there are some things it's surprisingly ungood at. Parallel things that you could distribute across a large number of processors. And so what we did was we added NVIDIA to a CPU. We connected it to a CPU, offload the work that the CPU is not good at. And we run that work insanely fast. Well, surprisingly, that work that the CPU is not good at represents 95% of the time that is spent in computing. We offload that 95% of the time, and we run it 100 times faster.
But you're talking about a total do-over of all technology.
Yeah.
You're talking about everything. You know, our country's building new plants that are using old technology. If that's the case, it's wrong.
Well, we should build amazing semiconductor plants here, and we'd be more than happy to build all kinds of chips here. But it's very clear that in the future, that general purpose computing, it's like a general purpose almost anything, you know, general purpose instrument of any kind, it's not very efficient. Right. There are many types of things that we want to do very efficiently. Computation of mathematics, we want to do very, very efficiently. And so as a result of doing it efficiently, you drive the cost down. You use less energy. One of our computers, this is our latest generation, this is the chip that goes into it. This is the largest chip the world's ever seen. This is beyond the limits of physics. We had to invent some new technology to make it possible to do this.
How many bits are in?
208 billion transistors.
In that?
Gosh, it's even harder.
What we're looking at?
In this little tiny part in the middle.
And what should that cost?
This will cost, you know, $30,000, $40,000.
And how much did you spend to develop?
The very first one, the R&D budget of this generation is probably something like $10 billion.
10 billion, not million. $10 billion. And you deserve the right to be able to recoup that. Well, and you're doing it.
Well, we're going to do our very best job. And this computer here,
and the name of that computer?
This is called the Blackwell computer. This computer here has
a very
a mathematician.
Right, mathematician.
Yeah, really terrific mathematician. And this computer here will replace thousands of general purpose computers. This is the part that's incredible. In fact, what's amazing is that the cables of connecting last generation general purpose computers, the cables of connecting them cost more than the price of one of these computers. the amount of energy that we save is incredible. Megawatts and megawatts and megawatts. Because of this, we made it possible for the computer to write software by itself. It is so insanely fast. Now the software can write, the computer could write its own software, and we call that artificial intelligence.
So if that's the case, why do we still need us?
Well, we still have to guide the software. We have to create the algorithms such that the computer can go write software. And that algorithm is called deep learning. Yeah, it's really quite a remarkable thing that happened in the last 12 years.
Let's stay with NVIDIA. Stacy Rasgon, Bernstein research analyst, joins us now for some instant reaction, along with our own Christina Partsinevelos, who is also there at the Developers Conference. Stacy, the stock is down a little bit today. Do you think it's just, I mean, it did add $1 trillion in market value this year. What do you think the market's reacting to?
Look, so the hype into this event was pretty massive. I've never seen anything quite like this before. I mean, they literally sold out the S&P Center yesterday. It was more reminiscent, you know, of a Taylor Swift show than an event. So I think that's it. Like, and you know, we were expecting to hear news flow on specs and everything else for the new GPU architectures and everything. We heard everything that we were looking for. I don't know that we heard anything that we weren't necessarily expecting. It looks like a great chip. I think everybody expected that. And so that's why it's selling off. And frankly, the whole space is selling off today a little bit. Like, it's not actually underperforming the broader semiconductor industry by very much. So I think it's just taking a little bit of a breather.
Christina, what are your top takeaways from the interview, from hearing Jensen, from being there?
Well, just from the interview, the biggest thing right now is that he just added a price tag to the Blackwell chip. I'm waiting to confirm with the PR team for NVIDIA on which particular chip, because like you guys talked about, Blackwell is a AI platform. On there, there's going to be various chips provided over the next year or so. And so Jensen held up a Blackwell platform, and he said between $30,000 to $40,000, which to me, I was expecting it to be a little bit more, and I know Stacy too. I've seen his notes. A lot of analysts have weighed in saying anywhere between $40,000 to $50,000, at least 30% higher than the previous H100 chip. So if that's the case, it could be good for margins if demand keeps up. So that's a strong takeaway from yesterday. Yeah, it was a sold-out event, celebrities, all of that. But I think what we did, the message that we got from NVIDIA is that they're not just the hardware company; they're providing the full stack solution. Jensen just mentioned that, and that's going to make switching costs a lot harder should you choose to leave NVIDIA in a few years and go to, let's say, the in-house options that a lot of mega cap tech players are trying to work on, or the likes of AMD or Intel eventually, hopefully, who knows.
Right. Yeah, the creation of the ecosystem. You know, Stacy, do you see that as well, and how important does that become in terms of the models that you build to figure out what this company is going to be earning in years to come?
Yeah, so the ecosystem is hugely important, right? You have to remember, they do everything. They do the chips, they do the hardware, they do the software, they do the networking, they do everything. There isn't a single other company on the planet that does everything, like, to the extent that they do everything that's around the chip, and it creates a tremendous amount of lock-in. People have been talking about their software ecosystem. It's called CUDA. They've been doing this for well over 10 years. Every other competitor recognizes that. Every other competitor has sort of a crash course now to try to improve their software offerings. So the problem is that you're fighting against a player that has been entrenched for over a decade. There's a massive installed base that's already there. There's millions of developers that can already program on NVIDIA's platforms. It's a very, very broad moat that is very hard to crack. And I think most of the other players out there are discovering that.
Yeah. Stacy, just something I'd love you to be able to explain to me and our viewers, power consumption, because we've talked about it a lot sort of in the broader context of data centers, but I know the introduction of this platform was accompanied by saying that it consumes a lot less power for more computing. But explain really what's going on here, because I got a little bit lost.
Yeah, no, so on a per workload basis, every architecture that they introduce is much more efficient. And I think they said something, it could be as much as 25 times the efficiency of Hopper. And take those with a grain of salt. I mean, like, fine, they're going to throw out, you know, like, good big numbers, but it should be more efficient on a per workload basis. On an absolute basis, though, these things do use a lot of power because you're cramming more and more compute into these data centers. And so you're actually dragging a lot more power on an absolute basis into these. It's actually like something that may become an issue, like, broadly for the space. Like, how do you get the absolute amount of power that's required into these data centers to do the compute. But given the amount of compute that they're doing with them on a per workload basis, much more efficient, much more cost effective with every generation.
Fed is expected to start cutting rates this year, and that could mean hundreds of billions of dollars of unrealized losses on low-interest bonds. That's according to a study by the consulting firm Claros Group. Hugh Sun has a new piece out. It's called "Banks Are in Limbo Without a Crucial Lifeline." Let's bring him in right now. Hugh Sun is a CNBC banking reporter. Hugh, this is really concerning to start thinking about what comes next. Why don't you just explain the situation, where these banks are right now?
Hey, good morning. Becky, it's great to be with you. And just to be clear, the Fed cutting the rates is probably going to, on the margins, help out this situation. The issue right now is that, there have been, 10 or 11 interest rate cuts over the past, 2 years or so. And therefore, there are a ton of unrealized losses on banks' held to maturity portfolio in terms of bonds, and also the mortgages that they issued that were all done under a low interest rate regime. And so those are unrealized losses. They're sitting there on the balance sheets. People have forgotten about it because there haven't been, apart from New York Community Bank, any blowups or near blowups. But those are still there, and that's still adding pressure. On top of that, if you screen for the banks in which have the most commercial real estate exposure, something like 300%. Of commercial real estate exposure versus their capital levels, you have essentially 282 banks that screen for those that have either high CRE, that have also high CRE, and at the same time, compromised capital levels. And so the analysis there is that these are banks, just like New York Community Bank did, that probably need to raise capital, and they probably need to do it within the next year or so. And they can raise that capital through either private equity sources, Becky, or they could try to, link up and get acquired by a stronger bank. Now, the issue there that we know is that last year was actually a 40-year low in terms of bank M&A deal volumes. It was, I think, the lowest since 1990, even before on an inflation-adjusted basis. And so we have a situation, Becky, where you have a lot of banks that are sort of wounded, but they aren't getting the relief that they need.
Hugh, I mean, the reason maybe this has flown beneath the radar screen is these banks are much smaller than New York Community Bank Corp. Yeah. That's the only one with assets above $100 billion. Most of these have $10 billion or less. How big of a problem does that pose to the financial system overall?
Yeah, I mean, I think the good news here is that systematically speaking, each successive round of sort of mini crisis, you think about a year ago with SVB, First Republic, those are above $200 billion in assets. New York Community Bank, a little bit over $100 billion in assets. Now the stress is really moving to the community bank category, and those are between 1 and 10 billion in assets. Those are the great bulk of the institutions that are going to be facing this stress. Now there are about 15 or 16 banks that were found in this analysis that were moderately sized regional banks between 10 and 100 billion. So there are issues there, and as you know, the Federal Reserve Chairman Jerome Powell has just candidly said, look, there are going to be bank failures as a result of CRE. It's going to happen, and so one point of this analysis is to say, look, across the universe of 4,000 banks, where are the issues going to be? And to your point, they are going to be in the middle to small size banks, which is by its nature less systemic. I think the issue is that a lot of these smaller banks support communities, away from the coast. And if they're essentially zombie banks because they're not allowed to raise capital and they're not able to raise capital, they're not able to engage in mergers with stronger competitors, you're essentially, hamstringing the economic development in those communities.
I guess the other question is, the Fed must be aware of this as well. How much pressure does that put on them to cut rates, even while you have an economy that still seems to be booming? And inflation, by the way, that's hotter than has been expected for the last couple of months.
So there's this multidimensional issue here in terms of, what outcome are you trying to engineer for? And I don't think that they're going to ultimately say, we're going to, put the cart, before the horse here in terms of what's the priority. And so, you have a cohort of banks out there. They're not the majority of them. They're probably 6 or 7% of all the 4,000 plus banks in the country that are going to run into those issues. you have regulators who are very aware of the situation. They're now on top of it, and they're issuing MRAs and MRBAs, matters requiring board attention to these institutions, and they're sort of confidential, under-the-radar reports saying you got to raise your capital. And that's, I think, their strategy. And they hope to be able to do this. They hope to be able to cajole them into raising capital, to selling some assets to improve their capital situation, and to do so in a way that doesn't cause anything systemic.